So let's start with us. How do we pay ourselves if we've got a bunch of money sitting in our business bank account? It's really simple. We just need to move it from one account to the other. It's called an owner's draw, and there are multiple ways to do it. My favorite way is to do a direct bank transfer. I've connected my business bank account with Relay to my credit union, which has my personal bank account. And anytime I want to pay myself, I do a bank transfer from Relay over to my credit union. And once the money hits my personal account, I can spend it on personal stuff like mortgages and groceries and clothing and childcare, etc. If you're anything like me, you might be worried that you're going to be double taxed, break the rules, or worst case scenario, end up in jail by commingling assets. So in this video, I'm going to teach you the proper way to pay yourself as a business owner that has an LLC. I'm also going to teach you how to pay contractors. Then we're going to talk about how to pay employees and put them on payroll. And lastly, how to pay you and put yourself on payroll. So let's talk about some other methods. Second favorite method is writing myself a check. I know, who writes checks? I do. And most business bank accounts will issue you a checkbook if you ask. At the very least, you can log in, type in your info, and they will cut a check and mail it to you. As soon as you have that check, whether you've written it or received it in the mail, you log into your bank on your phone and you do mobile deposit and you're done. Now, you can also use services like Zelle to transfer money. That's probably the only other service that I would use, because when you start using things like PayPal and Wise, you have to start paying transaction fees, and those fees add up. And you're just moving money from one account to another. And there's no reason you should have to pay fees. That's why I like bank transfers so much. There's all kinds of ways to do it, but the fastest and the safest way is to connect the two accounts and do a simple bank transfer. Now remember, this is called an owner's draw. This is how people pay themselves when they are an LLC. But why do we have to keep things separate? Why can't I just have all my business money come into my personal account and spend it on whatever I want? That's called commingling assets. It's when you mix business money and personal money together. I don't know if you've noticed, but it's really hard to keep track of stuff. Plus, it's just plain bad business. If you're serious about running this business, you've got to learn how to do it. Plus, it's illegal. IRS says that you can't do it. And if you ever get audited, or if you ever go to try and get a loan or apply for a mortgage or get an SBA loan, you're not going to be taken seriously if you're using your personal bank account for everything. Plus, it's never going to be easier than it is right now to put these systems in place. And by system, I mean just separate your bank accounts, okay? It's so much easier. But what classifies a personal expense versus a business expense? Here's how I want you to think about it. If you can sit across the table from an IRS agent or a judge, and you can justify the spend for your business, then you're good. The IRS defines it as anything that is ordinary and necessary for your business. So if you have to buy cardboard boxes to do shipping, obviously that's a business expense. But if you don't necessarily have to buy a brand new pair of jeans or a designer jacket, it might be a little hard to justify as a business expense. That's what I use as my decision-making criteria. When I'm going to make a purchase on Amazon or at the store or out at dinner, I ask myself, is this for my business or is this for me? If it's for me, I use my personal bank account. If it's for the business, I use the business money. That's it. Really, really simple. Now, I teach this to a lot of business owners, and every single time I bring it up, I always get this question. Evan, aren't I going to be double taxed if I transfer the money from my business account to my personal account? The short answer is no, but I could see why you'd say that. The term double taxed comes from C corporations. Just know that C corporations are for big businesses that are taking on investors, going public, and have more than 100 owners. 99% of us, like you and me, will never have to deal with C corps. So let's get that out of our minds for a few minutes. Let's talk about the double taxation thing. Because it would make sense, right? You know, you're moving the money from your business to your personal account. Like, it would classify as income, right? Like, why am I not getting taxed? Let me explain. Imagine you're wearing a big giant fur coat, right? And it only has one pocket on it. And that pocket is your personal bank account. You own the coat is yours. Everything within the coat belongs to you. Pretty straightforward, right? Now, let's say you open up an LLC. You're taxed as a sole proprietor, like 99% of us. What happens? It's like you sew on another pocket onto your coat. So now your coat has two pockets. You're still wearing it. It still belongs to you. Everything in the pockets is yours. You're just moving things from one pocket to another. So at the end of the year, when you file your taxes, you're going to total up everything in all of your pockets, and the IRS is going to tax you on that. So it doesn't matter how often, how much, or how little you move in between the pockets on your jacket. you're still going to have to pay taxes regardless of where the money ends up. And when I say taxes, I'm referring to personal income tax, both with the state and with the federal government. If you want to learn more about the taxes you need to be aware of as a business owner, check this video out because I break them down in great detail. We're not going to go into it in this video. I just want to use it as a way to explain how this works, because so many people are afraid to move the money because they think they're going to get taxed twice. No, not the case. In fact, opening an LLC doesn't change your taxes at all. Your business doesn't have to file a tax return. Your business isn't going to be charged a certain amount for taxes. You own the LLC. You're responsible for all of the earnings, whether it's personal earnings, whether it's business earnings, regardless of which pocket or bank account the money lives in. So hopefully that puts your mind at ease and simplifies things for you. Just know that when you want to pay yourself from your business, just transfer money from one bank account to the other. That's it. Keep it simple. Big shout out to Relay for sponsoring this video. Relay is the business banking service that I use for my businesses. They have all the bells and whistles and will help you accomplish all of the things that we talked about in this video. I'll leave a link in the description for you. All you've got to do is click on it, fill out the application, and within a day or two, you'll be approved with a free business checking account that's exactly the same as the one that I use. They're amazing. Great service, great people, and I'm really glad that I found them. Now, before I tell you how I pay contractors, what happens if you make a mistake? What if you spend business money on a personal expense? Let's say you're out and about with family. You're going shopping, you have this big old pile of clothing, you set it down at the register, you open up your wallet and you realize you don't have any of your personal debit cards or credit cards. All you have is business cards. And so you're like, oh, I can't put all this back. That would be so embarrassing. So you just swipe the business card. What do? It's okay. It's not the end of the world. Just try not to do it often. And second, we tell our bookkeeper or our accountant that we accidentally spent business money on a personal expense. They'll reclassify the transaction in our books and make sure it's listed as an owner's draw so that everything will be copacetic. So yes, you can fix mistakes after the fact. Don't beat yourself up if it happens. It's all good. I do this stuff from time to time too, so you're not alone. Let's talk about how to pay contractors. Because if you're anything like me, you work with people that work with other businesses, contractors. They have multiple clients and you are probably one of them. Whether it's Amazon Management Services or an advertising agency or someone that's shipping products for you part-time or a co-packer or supplier, whatever the case may be. Contractors are the most common type of employment. So how do we pay them? The same way that we pay ourselves. I'm serious. It's really, really easy. You can do direct bank transfers, which I think are great. You can also write them checks. Most of my staff gets a check in the mail. It's easier. It's simple. It's free. And then they get a physical receipt of the money they've received and they can deposit it into their bank account immediately. But there are other options as well. I use Wise a lot. Wise is a money transfer service that you can connect your bank account to and send people money directly out of your bank account. The transaction fees are the lowest that I've found of any money movement service out there, much less than PayPal. Which brings me to my next point. PayPal is another great option. All you got to do is connect your bank account, your debit card or your credit card to your PayPal account, and you can literally send money to people's emails. So if I had to rank all the payment methods in order, my favorite would be sending a check. Log into my bank account, send them a check, they get it in the mail, they can deposit it. Super simple and free. My second favorite is using Wise. My third favorite would be PayPal, and my fourth would be a direct bank transfer. Whoa, hold on, Evan. I see ACH and wire transfers on here, and you haven't even talked about it yet. You're right. As I was editing this video, I realized, oh my gosh, I totally forgot about two of the big ones. You see, when we're connecting our personal bank account to our business bank account, we'll typically use connection software to transfer money back and forth. But we don't want to do that with employees. We want to send money from our bank account to their bank account, but we don't want to have access to their funds. You know what I mean? That's where ACH and wire transfers come into play. And Relay is really good at this because they have both options. ACH stands for automatic clearinghouse. It's a way for banks to talk to each other and send money back and forth by using the account and routing number. It's a great way to pay people, both ACH and wire transfers. So I've bumped that up and put it at the top of the list. Now that I've clarified and fixed some of my own mistakes here, let's talk about some of the things you should avoid. Try to avoid cash and credit cards because the transaction fees are much higher. So that's how you pay yourself and how you pay contractors. But what about putting people on payroll? Payroll, also known as W-2 employment, is a completely different animal. Here's how you can tell the difference. If you get a paycheck that has taxes taken out, you're a W-2 employee. If you get a check for the full amount that has no taxes taken out, you are a 1099 or independent contractor, whether you're receiving the money or paying the money. Now, most business owners, including myself, try not to put people on payroll. But why? Because it's expensive and it's time consuming, and I don't want to unless I absolutely have to. So if you have employees that come to your location and do regular, repeatable work, you've got to put them on payroll. To put somebody on payroll means that you have to get workers' compensation insurance. You have to get set up with a payroll software to do the actual payroll. You have to start withholding money to cover self-employment tax or Social Security and Medicare. Don't worry, I break that stuff down in the tax video that I talked about earlier. So if you want to learn more about it, watch that video next. But the gist of it is this. When you look at your paycheck and you look at the taxes that have come out, sure, you see federal and state income tax, that's all withheld and whatnot. But you also will see Social Security and Medicare. That is self-employment tax. You see, when we employ other people, we pay half and they pay half. So 7.5% of what they make goes directly towards Social Security and Medicare. 7.5% of what they make, we have to pay as the business owner for Social Security and Medicare. It's a total of 15%. That's self-employment tax. The same goes for you too. If you don't have anyone on payroll and you're not an S-Corp and you're paying yourself with owner's draws, you're gonna have to pay self-employment tax too. Don't worry, at the end of the video, I'll tell you how to avoid it. But just know, when your tax bill comes at the end of the year, expect to pay 15% on everything you made just in self-employment tax. And that's on top of state and federal income taxes. You'll also have to get workers' compensation insurance for this employee. Workers' comp insurance is basically prepaying for any injuries that could happen on the job. So if they get hurt, if they get carpal tunnel, if they break a leg, if they get sick, workers' comp insurance is there to cover it, but you have to pay ahead of time for it. And different roles require different amounts of workers' comp insurance depending on the risk. So what you have to do is you need to talk to a commercial insurance broker. It took me forever to figure this out, by the way. I called like 10 different places. They had no idea what I was talking about until I finally got the right person who spoke the language. He's like, oh yeah, I got you. I can get you liability insurance, workers' comp insurance, no problem. So when you really think about it, it is so much easier to pay them as a contractor than it is to pay them as a full-time W-2 employee. So if you can avoid putting somebody on payroll, please do, because it's going to be way more expensive, way more time consuming, way more difficult, and everybody loses except for the insurance companies and the state. But obviously rules are rules, and if they fall within the category of needing to be a W-2 employee, then your hands are tied, you have no choice. Now there is one super secret squirrel way to get around this, and that's by having your employee form their own company. You see, when a company pays another company, workers' comp insurance, payroll, it's not required. You're just sending invoices back and forth and paying the full amount, because the state and the feds are going to get their self-employment tax from you anyway. And workers' comp insurance is for individuals, not for companies. So that is one small workaround. And it doesn't work every time, but it can. You can help your employees form their own LLC, open up a business bank account, and then you can contract company to company with them. But just know, if they're working regularly for you, showing up, doing the same thing day in, day out, they've got a regular schedule, you're probably going to have to put them on payroll. So when that time comes, work with a payroll company to make it happen. Let's touch on payroll companies really quick. I've used a handful of different payroll companies. Right now I'm using Gusto. Every 2 weeks I go in and I click a button and I pay my employees. They get sent a check. All the taxes come out. Everything is copacetic. Now that we've covered how to pay yourself with an owner's draw, how to pay contractors, and how to pay W-2 employees, let's talk about putting yourself on payroll and paying yourself with a paycheck every 2 weeks. Because not everybody can do this. You're not allowed to be on payroll of your own company. And that's only if you're an LLC taxed as a sole proprietor. If you change your tax status from sole proprietor to S-Corp, you can put yourself on payroll. In fact, it's mandatory. So when you hear someone talk about how they're taking a paycheck from their business, they're most definitely an S-Corp. They're still an LLC. They're just taxed like an S-Corp. It's a really interesting distinction. Basically, what you do is you submit a form to the IRS, Form 2553, and you say, hey, this is a real small business, and we want to opt into subchapter S of the tax code and take advantage of all of the tax breaks that are in place for small businesses. So we would like to change our tax status of our LLC to S-Corp. We'll follow the rules, but we really want to take advantage of those savings. What this does is it allows you to put yourself on payroll and take distributions. So now you get paid in 2 different ways. But here's why people do this. When you are an S-Corp, your distributions or your owner's draws, you don't have to pay self-employment tax. That's 15% that you're going to save. It's a lot of money, especially if you're doing more than $100,000 a year in profits. It's 15 grand. Not to mention the payroll cost becomes a business expense, which is huge. So S-Corps can actually save you a ton of money, which is one of the reasons I talk about them so much. It's a huge unlock for those that haven't taken advantage of it. But not everybody's ready for it. Because if you're an S-Corp, you're gonna for sure need a bookkeeper to keep track of the money in and out. You're gonna need an accountant or a tax preparer that understands S-Corps and how to file an 1120S, which is the additional tax filing you're gonna have to take care of. You're gonna need to put yourself on payroll, which means you need enough money to put into a payroll account every single month so that payroll can be taken out and the money can flow. And if you're just starting out and you don't have thousands of dollars to put into the payroll account to pay yourself through this method, it doesn't make financial sense. Just don't do it. So I encourage all of the people that we work with to form an S-Corp after they're making $100,000 or more in profits per year. That's when it makes financial sense. Before then, just focus on making as much money as you can. And then when the time comes, you can easily make that swap. You said, that guy Evan on YouTube told me I should form an S-Corp when I'm making more than 100 grand a year in profit. If your tax preparer is worth anything, they will agree and they'll help you set it up. If you want me to teach you how to do this stuff, like I've been through it, I have courses and things like that. I'll leave everything in the description for you if you're looking for some more in-depth education and walkthroughs. Now, you might be thinking, Evan, if I'm an S-Corp, why would I even put myself on payroll? Why wouldn't I just take $1 as a salary and then just take everything as a distribution or an owner's draw and avoid self-employment tax entirely? Why even bother with payroll? I thought the exact same thing. And turns out the IRS doesn't allow that. The IRS says that your salary must be reasonable. But what's reasonable? Now that is up for debate. But if you really want to get down to the nitty-gritty details and figure this out, you compare the role that you have with other industry professionals and you can kind of get an idea of what your salary needs to be. If you have no idea, you can also work with a tax preparer. My tax guy has a software that will tell me what range of salary I need to be based on how much we're earning and what type of business we're in. Or you can just go with a flat 50%. You'll be safe. If you're going to take advantage of subchapter S of the tax code and form an S-Corp to save money on self-employment tax, just be smart about it and do it the right way and follow the rules. And wait until you have enough money to make it worth your time. But that's the big one. Now, I just want to touch on one thing really quick, because if there's multiple people that are partners with you in this business, an S-Corp might be a really bad idea. You see, there's this rule called the pro rata rule. Some people call it pro rata. And what it means is that when you take money out of the business, you each have to take an amount equal to your percentage of ownership. So if you're pulling $1,000 out of the business and you own 20% and Jeff owns 30% and Steve owns 50%, that means you get 200, Jeff gets 300, and Steve gets 500. And so it can really cause some problems if certain business owners or partners want to take more or less than others. You really don't have any flexibility. So in that situation, we would leave the LLC taxed as a partnership, and then you would go form your own S-Corp as an individual. The business, the partnership, would then pay your S-Corp, and then you'd put yourself on payroll and then pay yourself from your own S-Corp. That's how we avoid that. But like I said, we're not going to go deep into that. If you want to learn more about it, I have in-depth courses that will teach you everything I know and walk you through the whole set. So let me sum this up and make it crystal clear, because we've covered a lot of information. When you are starting, your job is to make as much money as humanly possible. That money goes into your business bank account. When you want to spend that money on personal stuff, you got to transfer it using an owner's draw. Right? Simple bank transfer. You want to do the same thing with contractors. Ideally, everybody gets paid as a contractor. You use Wise or write them a check or use PayPal to send them money. When you get to a point where you're making more than $100,000 a year in profits, consider changing your tax status into S-Corp, putting yourself on payroll and saving the money on self-employment tax. Try to avoid putting people on payroll full-time in your business unless you absolutely have to, because it's definitely not easier and it's definitely not cheaper. And lastly, work with a professional on this stuff. Having a good bookkeeper and a good accountant can literally net you more money. When I started working with my tax guy, Steven, I saved $45,000 that year. He was able to take a look at my business and said, "Oh, dude, we need an S-Corp." He helped me put it in place. We moved all the stuff around. We fixed it. Yeah, I had to pay him $7,500, but I saved $45,000. And that's every single year from that point on. And we are just scratching the surface of tax saving strategies and other things that we can do. So if you need some help or assistance on this stuff, or you want a referral to some great people, just reach out to me and I'll do my best to connect with you and get you to the right person. Otherwise, watch this video next, because it breaks down in detail all of the different taxes that you are responsible for as a business owner, including sales tax.